and happy to have Paul as well. So my name is Christina Tennyson. I work with Bruce County with our Business to Bruce umbrella, which is our small business enterprise center. We do a lot of direct business support. So it doesn't matter what stage you're in, but that could be the exploring entrepreneurship and curious about what direction you want to go, starting up, maybe expanding or transitioning your business. Um, we do some programming, training, mentorship programs, as well as a lot of training sessions like this. So after this session, we'll send this recording, and then I'll include Paul's contact information, my team's as well. And if you would like to reach out for any additional support, you are more than welcome to. Um, and we'll have some of the upcoming training sessions that we have over the next few weeks. And currently, I'm working on building out our training sessions for the next few months. So if there's anything that jumps out that you're interested in, I'm always happy to take those suggestions and see what expert I can bring in to help facilitate the training session. So today we have Paul here. He has a lot of entrepreneurial experience. He has run numerous businesses in the area and very successful businesses, and transitioned and sold those businesses as well. I'll let him tell a little bit more about his story. Um, and as I said, fourth session now with Paul, so we're really glad to have him, and I really hope that you enjoy the session. Um, Comments and chat during, please use the chat box. We'd be happy to hear from you. And there'll be an opportunity for additional questions at the end where it might be easier to unmute yourself and ask Paul directly. But with that, I'm going to hand it over to Paul. And thank you, everybody, for being here today.
Thanks, Christina, and thanks for having me again. Before we get going and dive into this, I'd just like to know a little bit more about the audience. I think we have some familiar faces and some new faces. So these questions, please use the chat. I'd just like to get a handle on where everybody's from. If you could type into the chat where you're from to start with, would be great. We're local or all over. Last time we had a lot of local people in Bruce County, and we had somebody as far away as Atlanta, Georgia on the call. So California, look at there, isn't that cool? My daughter's in, which Christina went to high school with my youngest daughter. She's actually been in California the last 5 days for a work project down there. North Bruce, Port Elgin, waiting for a flight to Orlando. We should be with you. Wonder what kind of trade show. Kincardine, Southampton, Tobermory, Kincardine. So we got some local people in here. That's cool. If you could put in what type of business you're in as well, I'd like to know that. And then I can talk more specific if we have a general trend of, I think, tree service, we have a contractor. I love contracting businesses. You could type in there, dog and daycare, building services, land development. Oh, cool. We got some really good, diverse businesses. A few more. Don't be afraid. Put the stuff in here. Scuba diving. I have my Patai diving certificate. Haven't dived in years, but I got that. Campground. Any other businesses? Some people are being shy here. We got another people to let in here. I got to keep an eye on that. Multitasking. Tree service. Is a boutique general store. That's cool. So we got a diverse group of businesses so far. And if you can put in the size of your business by employee, or you're a solopreneur, do you have 5 people? Do you have 50 people? Just to get an idea on size on people wise. 10, 28, 3, 6, 6. Solopreneurs. So we got a nice diverse group of people here on business size. And also, if you could put in, if you have attended one of my workshops before, or just a yes or a no, so kind of get an idea of that as well. No, so no. So we have some new ones, and we have a bunch of new ones. People coming in. That's cool, and some people that have come back. Okay, more people to come in. I got to let that in. All right, so why don't we get going? I'll keep an eye on people coming in, Christina. But a really great, diverse group today. Before we get in, I love numbers. I'm a numbers geek. My dad taught me about numbers. I'm not going to get into the details, but I grew up in an entrepreneurial family. And right from knee high to grasshopper, my dad was a big records keeper, numbers data, and it's just it got bred into me. And I just love geeking out over numbers. In the 80s, you'll learn about my first businesses in the feed business and was balancing dairy and beef rations by hand. And one of my first computers, Excel, whatever back then, I build Excel files how to balance dairy rations. And to the day, you're going to see probably one of the coolest business what if spreadsheets you'll ever see. I'm going to brag a little bit that I built, and it's just incredible. So I love geeking out. I built some crazy spreadsheets, cost accounting, into our money boards, and that type of thing. So I'll keep an eye on the thing here, and we'll get into the workshop. So we did a basic financial literacy a couple weeks ago. This is advanced. Some of you mightn't be that advanced. Some of you might be like, holy smokes, I don't understand any of this. Please don't get overwhelmed. It is fairly basic stuff. I'm not trying to dumb the stuff down. I'm not an accountant, but I do understand numbers, financial statements, all this type of stuff. Please stop. I want this interactive, so put questions in the chat or even unmute yourself and ask some questions as we go through this, because if somebody's stuck, let's peel the onion back a little bit, and I'll stick around as long as you just want at the end to ask anybody's questions. And again, you'll see at the end, I'll show you my website. If anybody wants to have an individual call with me, we can do that to go over any issues or numbers you didn't understand or anything for your business. I don't charge for half-hour consult call over Zoom. So a little bit about me. I know I don't look a day over 32, but I'm going to be 61 this year, and I've lived, breathed, slept entrepreneurship my whole life. I started my first company when I was 20, grew up in an entrepreneurial family, actually in Bruce County. Grew up in Clifford, moved to Walkerton when I was 20 for the local people, and that's where I started my first business. I've had 5 completely different businesses. So I let somebody in. I got to go back here. Come on, there we go. Oh, went too quick. Sorry. So since I started, I've had 5 different businesses in 5 completely different industries, and I've sold all 5 for different situations, different reasons. My first business, I had a feed and grain farm supply company. I ran that for 9 years before I sold that. I had a road construction company. That's probably my flagship company. Built that from nothing, built it up over 23 years, sold that to a private equity firm. Third business, I had a heavy part filtration lubricant company for heavy equipment. That was kind of an e-com company in the 90s and into the 2000s before e-com. We built that through classified ads in farm and construction magazines, literally ship filters all over Canada. And Lubricants Local had our own delivery vehicles and stuff like that as well. Had a hot tub pool, backyard living business in Walkerton. That was in Walkerton as well. Sold that after 11 years. And then my last company was an e-com business, started an e-com business, imported products from Europe, distributed them throughout North America in a Shopify store, built that up over 7 figures and sold that. Combination of these businesses did over 120 million in gross sales. I have an honors degree in the School of Hard Knocks. I've gone through every challenge, every obstacle, anything you can imagine in these past 40 years. So yes, a lot of success, but I've had every kick in the butt you can imagine, and that's how you learn. And that's, this last 5 years I've been doing the business profit and, taking my experience, fast tracking people that maybe they can learn from some of my experience and my success, and that they don't maybe have to make some of the mistakes and the learnings that I've gone through over the last 40 years as well. And today I get to literally look under the hood of hundreds of businesses in the last 5 years. And one thing I do is, literally before I look at a business, I need to see their financials because the financials tell the tale of the business. So just another quick little blurb about what I do. So the services at the business profit, more people coming in here, is what we do is we do business assessment and advisory of a company. Again, that starts with a full financial assessment and a plan of what you need to do to overcome your challenges, meet your goals. Biggest thing that we do today is we help people systemize their companies, management process, system solutions, automating companies, literally creating paint by number businesses with some software called Monday.com, integrating other softwares, understanding the business flows right from a CRM, estimating sales funnels to manufacturing, trade service, installing, delivery, managing that whole process, make sure everything gets invoiced, asset management, HR management, anything imaginable in your business. We create automated systems and create paint by number businesses. It's the coolest thing ever. I do special projects, help people buy, sell companies, exit advisory, due diligence, and what we're doing here today is business education and workshops as well. And we focus on profitability, systemization, and that the business is a saleable company as well. So again, the systemization, when you look at a business, and even today, we're going to talk about all these different areas on the financial side. Doesn't matter what piece of your business, from inventory, purchasing, human resources, CRM, bringing things into dashboards, knowing your numbers, and systemizing those companies. I focus on profit. I have a thing on my website, big sales build egos, profits feed families. And I don't care, it's about profitability in a business. And that's what we're going to really dive into today, is the numbers and looking at profitability and breaking your costs and expenses down and knowing every intricate part of your company and the efficiencies within the company. In any workshop or anything I do, what I love to do is give you the tools to operate a successful, profitable, systemized company, help you understand your bottlenecks and your opportunities. Everybody's facing a bottleneck in their business. Is it not enough sales? Maybe it's too many sales and we can't get enough people. But there's always something holding you back, and you overcome one bottleneck, then there's going to create a new bottleneck. So you always got to, business is like chess. You got to be thinking 2 or 3 steps ahead of, we do this, what's going to happen next? And again, it all comes down to numbers. So we're going to talk about that today and showing you, I think there's some really cool things, especially when we get into the detailed break-even calculator of looking at opportunities, and gives you a tool to make decisions before you actually start signing the paychecks or writing the checks out or doing some expansions or making changes within your business. There again, helping you give a clear vision for the future of your business. Margot keeps coming in and out. I don't know if she can't get in. I've let her in about 4 times. So in business, one of my favorite guys, Marcus Lemonis, his story is, if you don't know your numbers, you don't know your business, because business is all about numbers, is all about profit. And knowing your numbers, it starts with, we're going to get into some of this stuff today, as a dashboard of your business. Business is measured. Yeah, lots of late cameras coming up. Let's watch this. Business is measured in money and numbers. And if you don't know your numbers, you don't know really what's going on within your business. Not knowing your numbers, it's like driving your car without a dashboard. And this is probably one of the biggest things I see when I start working with a company in general, especially smaller companies, is they don't understand their P&L or their balance sheet or other financial things. And could you imagine getting in your car and driving to Thunder Bay, over the next few days, and not knowing how much gas you got in the car, not knowing if you have oil, temp, pressure, how fast you're going, all those things. And a lot of people are driving their businesses today because they don't have current numbers. Maybe they don't understand their numbers, or maybe they don't have detailed enough numbers to really know what what they need to change and what to do to be more profitable, or if they want to do an expansion in their business or something like that. So you have to know your numbers. So the last, just a kind of a quick refresh, kind of things that we went over in the last basic financial literacy workshop was, what you need to know is your profit, your bottom line, your cash flow, your gross margin, your break-even point, your average order value, lifetime value of a client, new customer acquisition costs, marketing cost per lead, marketing cost per order, percentage of sales, inventory value, inventory turnovers, budget and projections, balance sheets, so that's some of the basic stuff. And I wanted to throw this in here, and hopefully nobody on this workshop's doing this, but shoebox accounting is not bookkeeping, and it's really important to have, some people still do this, but it's really important to have your books up to date. If I was to make a blanket statement in general, and it doesn't accuse for everybody, most business owners should have a bookkeeper, because I see the ones that do their own bookkeeping, they're generally not maybe accurate. They're always behind, and they don't do, that's not in general, if you're good at it and you like doing it and you're efficient at it, go ahead. But you should really consider, using some kind of professional bookkeeping service. And with technology today, it's not that expensive, because you need those up-to-date current financials on a monthly basis. I'm a big believer in that. So you got to have good bookkeeping, that things are balanced and reconciled on a monthly basis so you can make decisions with your bookkeeping. So not going to get into bookkeeping today. So knowing your numbers, tell the story of your business. We've kind of gone through this. You need to know your numbers to be successful. And what we're going to these are the 5 areas that we're going to concentrate on today. And I'm going to go more practical, and we're actually going to go through a business budget. We're going to go through a cash flow projection. I got 2, a basic and an advanced break-even analysis. I think you're really going to enjoy that. And then we're going to touch base on cost accounting and scorecards, dashboards, KPIs. Any questions or comments before we get going here? Maybe type in the chat if there's anything specific. I can't say that word very well. That you would like to learn today. Just some of the things, kind of going over this overview of things that you would like to learn today, and I'll make sure I cover them. If there's any specifics that you want to know, put in the chat before we dive into these different statements. No chats, come on. This is all about you guys, not me. So please put in there what your, maybe any specifics that you want to learn here today. Everybody's shy. Well, we'll just dive into it. Stages. So budgets and projections, it's simple. You always want to bring more money in than what you spend. I always told my kids that growing up, you always want to keep some in the savings account, right? And by projecting ahead, number 1 with a budget is key to your business financial success. Allows a business owner to plan for expenses, analyze expenditures, and make changes according to your needs. Plan enables you to concentrate resources on improved profits, reduce costs, and increase returns on your investments. So, especially established businesses, you have last year's numbers. Let's do a budget. What are we looking at for the next year? Is it going to be status quo, or are we planning on expanding our business? To develop a solid budget, first it starts on the revenue side. Revenue projections should be based on historical financial performance as well as projected growth. My old saying, you got to grow or you go. If you don't grow your sales, your expenses don't go down generally. So you always got to be trying to sell more, reinventing yourself, and growing your business. Again, it's up to you how big you want to do that. My biggest challenge is cash flow while maintaining enough inventory. Yes, inventory can And we're going to get into that. We'll look at that on the cash flow projection. Thank you for that comment there. So back to there. Fixed costs, we're going to dive more in today. Last time we talked about what's the difference between fixed and variable costs. So second thing in a budget, you want to look at your fixed costs. Those are expenses like, administration wages, facility costs, rent, insurance, bank charges, subscriptions, travel, education. Those are the expenses that you pay. Doesn't matter if you sell 0 widgets or 1,000,000 widgets a year for a month or whatever time period. You're paying them no matter what if you're selling or not. I break out marketing costs. It is a fixed cost because you can spend 500 or 5,000 or 50,000 on marketing. There's no guarantee how much business you're going to get, but I like to break that out. And when we get into some cost accounting today, you'll see there. And then your variable expenses, those are the expenses that when you sell something, your gross margin, your cost of goods, includes if you're making your own widgets, your labor, utilities, raw materials, any production costs, sales commissions, and credit card fees. So preparing a budget, use a spreadsheet. And again, at the end of this, remind me, Christina, some of these spreadsheets I will share with anybody that wants them. If they don't have anything, they just have to send me an email and I'll share some of these spreadsheets. Some of these are just Excel. I'm a big Excel guy. At the end of each compared, when you do a budget, you always want to compare your actual to what you projected as well. And then so you can make management decisions accordingly. So this is basically, I'm going to dive into an actual budget here in a second, but here's a business budget. We go by the month across for 12 months. The top of it is our sales and our cost of goods or gross margin. And these are our fixed costs below, which give us a plus or minus profit for the month and accumulated profit. So we're going to actually go to an actual budget and I'll do a couple months to show you. And again, these are just fictitious numbers I'm putting in. So, I did the first month here. So on a calendar year, if you're a corporation and your year goes from May till April, do it the other way around. But basically what you want to start in here at the top is your different sales categories. So your gross sales at the very top. So in this example, month 1, I just put in, we had $50,000 for the sales. Our cost of goods, if you're making them, we can get more detailed on that. You can break down actually your projected costs of raw materials, labor, and things like that on the top. But simple version here, we'll just pretend we're buying our widget and we have a 50% margin, then a variable cost. So sales commission, people get confused with this. If you have a salesperson and you pay him a base wage, that would be a fixed cost. But if you pay him a commission, the commission portion is a variable cost, which is a cost of good. Same with credit card fees. If you're paying, you only pay that 2 or 3% if you sell something. Okay, so we put that in here. So in this month, we had 50,000 in sales. We know our cost of goods is 25. Total cost of goods 28. Our gross profit is 21.5. If you notice here now, we're not dealing with taxes, no HST on our sales for our purchases, because this is basically remedying a profit and loss statement. When we get to the cash flow, then you want to include taxes collected and paid. So overall, on the top side, on our sales here, we then project we have 21,000. Somebody else in here. We would have $21,500 left over of gross margin. If you take your gross profit divided by your gross sales, we have a projected gross profit of 43%. Then what you want to do is break down your fixed costs as well then on a monthly basis. So if you have admin wages, bank charges, in here I put your marketing, office expenses, phone insurance, bookkeeping, software, renting your facilities, consultant, utilities, vehicle, any of those fees that you're putting in here, you would put on a monthly basis. And again, you look at historical numbers, what you did last year, and then project ahead. Are we different? Do we want to plan some growth? Are we going to add another vehicle? Are we going to add another person? Are we going to try to sell more? Does our margins change? So then we project here. In this case, boy, this ain't good. We're losing $550 already in this projection with those expenses, with those sales, and this gross margin. So again, you can go and look at this. Oh boy, we want to try to sell some more stuff or whatever you need to do. And then you go to the next month. Maybe we'll just do 1 month here. We're going to sell $60,000 worth of stuff in February, and our costs of goods is say 28.5. I'm just pulling some numbers out here, and our sales commission is going to be a little bit more. Let's say it's going to be 3,000 this month, and our credit card fee is 2%. So let's say it's $1,200. So we're projecting for the month there now. Now we bumped up nice little bit in our sales, put in our cost of goods, all this stuff, and our margin's going to jump up a little bit. Maybe we got a little better deal on something. Whatever your numbers are, project ahead, and then you can go down the expense columns, all the way down. I won't bore you with all the stuff. Let's just put a figure in here. Maybe your accountant bill, you do your taxes and you get that once a year. It goes in here. And you can go down the thing here. Let's just put a figure for simplicity terms of our total costs there were 22, let's say $20,000. And we'll pretend that this is broke down of all of these. So now, what did we do here? 20,000. So we got to fix this formula here. There we go. So now we made $4,200 this month. We sold more, our expenses were a little bit more. And see, now accumulated is going to give you accumulated profit or loss as you go across the different months. So again, you just go across your budget for the whole year. Again, this is a projected, basically profit and loss. No taxes. There's no, somebody else is coming in here. There's no loan, capital costs of loan payment in here. This is just straight income and expenses that you're projecting out over a period of time. Any questions, comments on this? Love to have a copy of the spreadsheet. Again, at the end, remind me, I'll give you some contact information. If you send me an email, I'll send people a copy of some of these spreadsheets. Comments or questions on a budget? Does everybody get this basic budget and how to do it?
There was another one there in there, Paul, about an owner's withdrawal. Would you put that under a fixed cost, a variable cost?
That would generally be a fixed cost. And again, if you're a corporation, you could be a T4 wage earner, just like the other employees. If you're a sole proprietor, you're doing a cash draw. So it's not necessarily you get what's left over. So in a budget, you probably wouldn't put, again, it depends how you do your books and your accounting, but you mightn't put the wage in there if you're sole proprietor because you get what's left over or more on a cash flow. We'll cover that on a cash flow projection. You take a draw, how it affects the cash flow because you're not actually putting it in as an expense unless you're charging the company a wage. So that's where it kind of gets a little different. Again, I'm not an accountant, but if you are a corporation, you can either take a T4 wage out, a combination of that, dividends, bonuses. I don't want to get it into the weeds too much on that one, but again, it depends how you take your money out and how you do your accounting. For sole proprietor service business, how do you decide what the cost is for your time? As in, how would you decide what the hourly rate is of your time? Well, I could spend about 5 hours on this workshop with a question like that too. So it depends on do you have the cash flow to pay yourself in a sole proprietorship or any business, determine what you're doing. One thing, and I mentioned this in the last workshop, what I love to do is too many business owners get caught in the weeds of their business. And what I mean by that, let's take an example. You want to make $100,000 profit in your company this year. So if you work 40 hours a week, that boils down to your time is worth $50 an hour. So I always tell people, put a little sticky on your computer what your time's worth. If you want to make 250,000 a year, what's your time worth? Then it's worth $125 an hour. So always think about, what are you doing? Are you doing work that you could hire somebody for 20 bucks an hour to do? Doing that thing so you can spend time on things that are really going to move the needle in your business to increase sales, increase profitability, working on it. So that kind of answers that question. But again, it comes down, you can only afford to pay what your business can afford to pay you, what cash flow allows you to pay, and what kind of wage do you need out of this business to fund your lifestyle? And again, are you trying to grow the business? You got to leave money in to buy capital. You don't want to borrow money. There's a million questions around that whole thing of what to afford, what to pay yourself. If you get into a real profitable situation, you got lots of cash, and you don't have to pay down debt. You leave a nest egg in the company, which is always a really good idea, to have 3 to 6 months worth of expenses in cash in a business. For the rainy day a pandemic hits. Nobody knows anything about that and what that can do when we start talking about cash flow, right? Is to have a nest egg, to cover those things. So that's a big open can question. And it depends on the individual business, and a sole proprietor. A lot of times they just take a draw and they got to record that because it's profit at the end of the year, and they record that on their taxes. Hopefully that helps. Any other questions on the budget before we move on to a cash flow? And I have another one too. I don't think I have it up on, or do I have it up on here? I do. So I have all different ones I make. So this one here is easy. If you know your gross margin, same thing. You put in your product cost, and it'll automatically fill your cost of goods in here. Just like, and say with commission, if you're paying commission to a sales rep or your credit card fee, I build some really cool little things. I don't want to get too detailed now, but on this one, you put those in and automatically put in your cost of goods into here and your credit card fees, that you don't have to manually calculate them if you knew those costs. So I'm going to go back to here, slideshow. How are we doing for time? We're good. So again, back to the first thing you want to do is a projected budget, to what's this next 12 months look like, minimum of 12 months in your business. Are we, going off historical figures? Are we going to project to make money, lose money? And then by looking at those months, you can make managerial decisions of cutting back, increasing different things. Are we going to expand, put those expansion numbers into that budget? Next thing is cash flow. Cash flow and cash is the oxygen of your business. If you have no cash, you can't pay your bills. And unfortunately, what's the stats? In North America, over 90% of businesses go out of business in the first 5 to 10 years, unfortunately. A lot of times as they run out of money. They're not making money, they run out of cash, they can't pay their bills anymore. So if you don't have cash, that's the oxygen. You can't breathe, you can't carry on. So you got to understand, in a cash flow, it's a movement of money, gross amount of money in and out of your business. Cycle of cash flow and outflow determines the business solvency. Again, you'll see in a minute how we can project ahead. You can see your runway in time. Are we going to have enough money or not? There's a question in here about inventory. If an owner's, maintain enough inventory. So inventory, it's not a cost of good, because you can buy, and we'll get into there, you can buy a whole bunch of inventory, it takes your cash, but maybe, those are your supplies over the next 2, 3, 5, 10 months. Depends on how quickly, if you're buying your product, how often you can replenish it. Maybe you're getting it from overseas and you can only get it once a year. Maybe you buy twice a year. A lot of companies do that, seasonal type products. Maybe you can order today, get it tomorrow. So we could have a whole session on inventory management here as well. And a lot of times you really have to look at your inventory because it's just like $100 bills sitting on your shelf. If you have dead stock, dead inventory, it's money sitting there. just like accounts receivable. So you got to be aware of that. There again, cash is, as everybody knows, is used to pay for every expense in your business, from stock, raw materials, employees, rent, taxes, anything you write a check out for, the money's got to go to your bank account. And again, just like I told my kids growing up and business owners, you want to be in a positive cash flow. Sometimes we can have seasonal businesses. My road construction business, we literally shut down in October until end of April, May. We used to do a bit of snow removal back in the day. But, all our money, we'd have receivables dribble in, but, we only brought money in about 5 to 6 months of the year. Maybe your business is that. So cash flow management is really important if you have a seasonal business. I've seen somebody here is in the campground business. It depends when people pay for their lots or seasonal lots. You could have a real swing in cash flow as well. Cash flow, project future cash flows to give you greater financial control, provides a deeper understanding of your business's performance, identifies shortfalls in advance, and supports planning activities. Just another comment on a budget and a cash flow. If you go to any financial institution today, basically any kind of bank, and want to borrow money, what are the first three things that they're going to want? They're going to want up-to-date, reconciled, balanced financial statements. They're going to want to see a budget, and they're going to want to see a cash flow. There's not many finance, especially if you're borrowing any amount of money, they're going to want those three statements. So it's really good to understand those things, because people are going to need them if you want to do that. So here's an example. We're going to go to a real live cash flow here now. To give you an understanding how a cash flow works. So in a cash flow, it's not a profit and loss like a budget. We're basically measuring what we're starting with cash, what money's coming in from different sources, what's going out in different sources, what's left over, and doing that and projecting it out. So as an example here, we have a business. We start the year in January with $25,000 in the bank account. Let's make this a little bit bigger, maybe. Does everybody see this okay? Yes?
That's nicer. That's nicer, Paul.
Okay. So we start the period, whatever the period is. Again, we have this January throughout. We start with 25,000 in the bank, cash sales. So in this business, we had people that gave us 20,000 bucks, no receivables. They come in and bought something from us and paid you right away. So in January, we had 20,000 in cash sales. This here, say if you had a property you rented in the business, that we would bring that in here. If you got HST back, if you paid more HST than you collected, that would be coming in here. In this business, we got accounts receivable. You sell people stuff, but they're not paying you right away. They're paying you sometime in the future. So in January, we collected 55,000 in accounts receivable. Hopefully that was business that we did in December, not from last August, because again, cash flow wise, you want to look at your age receivables, because that can just cripple you. If you have a lot of old money sitting out over 30, 60, 90 days or more, you need a system to follow up and not allow people to do that unless you're cool with it. If you got some grant money, you would put it in here. If you had a loan, you got a loan from a bank or a lending institute, you would put it in here. Any source of money coming in, you put at the top. Then, okay, there's your inventory. For your inventory question, we're buying $15,000 worth of inventory this month. Maybe this is going to last 5 months. Maybe it's going to last 2 weeks. We don't know. We paid $25,000 in accounts payable. So again, if your vendors give you terms, it's when you pay your vendors. Maybe this was right away. Maybe this is stuff that you bought back in January. Whatever period of time you paid vendors off your accounts payable list, 25 grand. You paid the government source deductions, $2,300, or anything else here. Then we get into so we totaled here. So far here, we brought in 75,000 in cash. We started with 25, we brought in 75. Up at the top here, we've spent 42.5. Now we get into operating expenses. advertising. So this would be with HST. So any of these, if you're paying HST, you want to add the HST on, because when you write a check, you have to write the check for the $1,000 plus the HST, right? So all these things in your cash flow have the tax in. Your bank fees, anything, any expenses, your insurance, whatever you're buying, it goes down here. So we had operating expenses of 21.5. We had an interest on a loan of $1,500, and we have a principal payment on a loan. Okay, principal payment, because your interest is expensible, right? This isn't a P&L. We try to separate that out. And on P&L, your interest is expensible, but your capital is not. It's a balance sheet item. We had $5,000 of principal. So these other 6,500. So total of all these, we put out $70,100 in this period of time. So we had a positive cash flow of $4,900. So we have an ending cash flow of $29,900. So we started the month with 25. We brought in another 75,000, and then the combination of all this money that went out of the business for all these different things. Back to the solopreneurs question, if you did a cash disbursement for owners, you would put it in here as well. If you're taking money out, total of that, we have a positive cash flow of 4,900. So now we start the next month off at 29,900. So we'll just do a quick one. We had, say, 25. I'm just going to pull numbers out of my butt here. 25,000. We got no HST. We only collected 25,000 in receivables this month. People weren't paying very much. And we got a grant for $2,400, because if I build you a business system board, the government would gladly give you $2,400 credit grant to help pay for me to do that for you or somebody else. There's a really cool CDAP grant, little commercial there. Had to throw that in. We bought now, oh boy, now we're getting ready for spring, and we got to start loading up an inventory. We had $45,000 worth of inventory because we got to have it for spring now. And accounts payable, we paid another $25,000 there. And let's say the same source deduction here. So we've spent 72,000 now. And let's just bundle all this up, before we had 21,000. I'm just going to put another figure here of $25,000 for simplicity terms, not into the details from now. 32, we had the same loan payment, and now we gave $1,000 to the Diabetes Society. So we had $112,000 go out this month. So we went down in the hole $59,000. So if you're projecting this out, now we're in a deficit. So back to an inventory question, we're loading up an inventory. This is what a bank's going to need to see in a cash flow projection if you need to get a operating line. Maybe you need a seasonal operating line or whatever. This is how you would know what you need for something like this. If you're buying something, you're building inventory up for seasonal or anything like that, and you can do the same months, and you're going to keep projecting out over the period of time. You can do a cash flow projection generally by the month. If your cash flow is tight, you can do it by the week. I've helped turn around bankrupt companies. We actually did cash flow projections by the day because cash was so tight they could hardly pay their bills. So we actually managed it by the day of what was coming in and out of the business, because they run out of cash, you can't pay your bills. So we were on a daily cash flow projection. So it depends you and your business of what time period you need to manage your cash flow. This sheet is luxurious version of mine. Would love to have this template. Yeah, no problem. What if a vendor gives you 90 days dating? That's awesome, because what it does here, okay, here, maybe this, an example here, you have no accounts payable then that month. So see what it does, you do that, they give you terms, we're not putting as much out, and we're only $4,900 behind this here. And again, if you can negotiate with your vendor to get terms from them, maybe you don't have to go to the bank to get an operating line for seasonal goods. So that helps your cash flow. You're deferring the payment. So what you're going to do there, so maybe you're not doing it here, you get this 45, and you would put that, the accounts, let's say if you had that accounts payable over here, you could project that out, that you got something and you had another $45,000 payment over in May. Because you go here now and it's projecting out, it's going to hit the cash flow over here. So again, it depends when those things are due. If you're getting terms, you can put it for those 90-day terms or whatever the terms are. When you have to pay it, you can see with these projections out what your cash position is going to be anytime in the future. Any other questions? There's no such thing as a silly question. Please ask them if you don't understand something, because this can be, I'm going through this really quick. Okay, no questions.
I just put the grant that Paul was referencing in the chat. So this is something he can help answer some questions at the end, but just so that you're aware.
Thank you.
Of course.
Break even is the next one. So basically, break even point is the revenue necessary to cover your total expenses in the business. So an example here, say your total fixed costs of your business are $250,000. Your gross margin, you're running at 40%. Divide those out. You need to sell $625,000 worth of widgets in a year or whatever time period this is, just to break even. Gives you a very basic break even here. Okay, we're going to go to the magic now. Basic. So I did this one quickly if anybody was in the other workshop. So in this example, what we have here, just a little break-even calculator I created, basic one. So in this business, we can put any numbers in here. This business does $500,000 in revenue. Let's say this is an annual basis. They run a 50% gross margin, and they have $200,000 worth of fixed costs. So with those sales, this gross margin, this fixed cost, they would make $50,000 profit. And their break-even point, they'd have to sell $400,000 worth of widgets to break even, to have zero profit. Does everybody see that? Here's the magic. There's probably not one business owner here that can't do these three things. So let's say that you can reduce your fixed costs by 5%. So if we take our fixed costs, reduce them by 5%, instead of 200,000 now, they're 190,000. What's that do? Instead of making 50,000 in a year, we're making 60, and our break even goes from 400,000 to 380,000. Does everybody see that? So this is kind of a what if scenario. What if I do this? What if I do that? And I love doing the 3 5s because, most businesses I look at, I can find them 50 or 100,000 bucks in profit if they're any kind of size, do it every day. But here, I challenge you to look at your books, reduce your costs, fixed costs by 5%. Let's increase our sales by only 5%, 105. So instead of 500,000, we're only selling $525,000 a year. Our profit now goes from 50,000 to 72,000. Our break even stays the same because we're actually selling more stuff. Okay, 2 little changes. We're only selling 25,000, $2,000 more a month. And we reduced our fixed cost by $10,000 a year. Gross margin is king. Gross margin is king. If you increase your gross margin by 5%, and I got a little slide here afterwards, there's about 8 or 10 ways you can increase gross margin. But if we go to a 55% gross margin, look what happens. Our profit went from 50,000. We've almost doubled our profit now. The same business. We've only increased sales by 25,000 from 500,000 to 525. Reduced our fixed costs from 200 to 190, and our profit has gone from 50 to almost $100,000, and our break even now is down to $345,000. Little tiny changes in a business, what it can do. Again, big sales feed egos, profits feed families. It's about profit. Any questions on this basic break-even calculator? You're explaining it so well. I don't have any questions. Can you please explain the break-even zone? The break-even zoned out. What do we mean by zoned out? Can you explain on that, Mary Dale? I don't understand your question.
I'm just gonna step in. I'm thinking just means just distracted for a moment, like that, zoned out as distracted. But if you could explain, just do a quick summary again on break even. The
So you
meaning of
want to
break
know
even.
your break even. I can go back to the slide. That's what we're doing. So you want to know your fixed costs in the business, and you want to know your gross margin. And dividing those out will tell you how many dollars worth of points, how many dollars worth of sales you need to cover all your fixed costs. You won't make a profit, but you'll break even. Back into the
Okay.
calculator. You know, back here we'll go back to 100. We'll go back to 50 and 100. So here, again, we have 200,000 in expense fixed costs. Our gross margin in this scenario is 50,000. We're making 50. So at these fixed costs, this margin, we'd have to do 400,000 in sales. We would make no money just to break even. Does that answer your question? So you can use this. So, you know, say for an example, we're going to hire somebody, you know, so we could go, we can do it too. No, I'm going to wait to the detailed break-even calculator. I don't confuse you on this. Any questions on the basic one before I get into the advanced? Okay, so we're going to go to the advanced break-even calculator. This thing is so cool. I geek out over stuff like this. So what it starts with, we have 4 categories. So in this business, we're breaking down our fixed costs on an annual basis to start with. So I've done both these the same, and this is a what if, so you can compare 2 different business situations. So I broke it down in this business, you know, their admin salaries, the owners, the, you know, customer service people or whatever, 180, they're paying 30,000 a year in rent, bank charges, interest, auto leases, you know, repair and maintenance, their phone bill, accounting, insurance, supplies, utilities, miscellaneous. I don't like miscellaneous expenses. I like to have them broke down. SaaS, software as a service. You're buying QuickBooks, you're buying Monday, you're buying software. So you have total fixed cost in this business of $341,500. I break marketing down separately here. So this business is spending, let's say, $500 on some Facebook ads, and they're spending, they're hiring an agency to run these and maybe do a couple posts on Instagram or something like that. So they're spending $1,000 a month on marketing. Again, I've just put numbers in here. This here, if you have delivery costs, you can put it in. I didn't confuse it here. This is really cool for an e-com type business. If you know your cost per order, if you're in a 3PL center, or if you're running your own pick, pack, and ship warehouse, you can put your things in here, but I'm keeping it a little more simpler. Then you go to your widget that you're selling. So in this case, the average sale is $258.75. And how I've done this, I've picked on a contracting type business for this scenario. So let's say for an average, their service rate is $115 an hour, and their average service call is 2.25 hours, because we can what if these. That multiplied by that gives us $258 with the average bill of the plumber going to fix things in somebody's house. Let's call this a plumbing business. The product cost, that's just on the credit card charge here. Labor cost. So I do a what if up here. So let's say the labor rate is we're paying the technicians $35 an hour by the 2.25 hours. It's a variable cost because you wouldn't be paying the technician unless he's out fixing the plumbing in the house. So our labor cost of our technicians is $78. Our credit card charge is 2% of the sale. It's a variable cost because you don't have the credit card charge unless you're making a sale. And you have a salesman that's out selling and he gets 5% or she gets 5% on every order. So their commission is 12. So our total cost on this sale, average sale in this business of 258, variable cost is 97.46, gross dollars margin of 161. So when we go to the front page, let's take this business has an average of 215 service invoices a month. This is on a monthly basis. Okay, so 215 service invoices, average order value of 258 that comes from this page back here. 258. So that's an average of 7.17 invoices a day, service calls a day. Our gross margin is 62.3%. Our marketing cost is $4.65 per invoice. So it's taking our monthly marketing costs divided by how many orders we had. Again, this can be whatever widget, whatever your business is that. And our fixed costs, and fixed costs eat businesses up. You really got to be careful of your fixed cost. It's, our total fixed cost divided by 12 per month, divided by the number of invoices we do. So our fixed cost of running this business is $130.55 for every invoice we produce. It's really important. This is kind of a cost accounting when we get to that, is to know your variable and fixed cost per order. So in here we know these numbers. So we know in a break-even situation, we need to have basically 6 orders a day. We're making on average $26 an order. We're making $186 a day in profit and $5,600 in a month, $16,000 in a quarter. We'd make $68,000 in a year with sales of $55,000 a month. Gross sales is $667. Any questions on this? Anything in the chat? The magic of this now. Okay, we're gonna, you know what? We can't get good technicians. We're having a tough time, and the old scenario, I run into it every day. We can't, there's a plumber out front of my place right now. Just call Cooks. They're not coming in here. Anyways, what was I gonna say? I lost my tune of thought here. Okay, back to wages. You know what? We can't get technicians. We're having trouble getting the work done. And you have in your head, I can't afford to pay more than $35 an hour. But let's say, and I always tell people, what's it costing you? Lost work, hiring, training, all that. So back to here in this scenario, we're going to go back to the what if column. So this is our standard. This is our standard. This is our. Now we're going to start playing with things. So we're going to go over here and instead of 35, you know what? We got to pay our guys 40 bucks an hour now. Okay? To get guys and keep good people, whatever that number is. This is just an example. So in this same scenario, what we're doing here is our average order value, same amount of time, but now, because on the front page here, I'm going to come back here. I don't want to confuse people. Let's go. I'm going to mark that down. 120, 45. So we're going to go back. If we charge the same $115, we're going to only make $38,000 a year on those same amount of services. See, if we pay them more, yeah, it's going to cost us. But then we got to figure, okay, what do we have to pay them? I did this beforehand. We'd have to pay our service rate. To make the same amount of money would have to go from 115 to 120 an hour for our service rate. If you wanted to make the same amount of money to know what, if you paid your guys 5 bucks an hour. So you can make management decisions, right? So back to here, it's the same bit break even. So now, you know what, but we want to make more money. What if somehow we added an extra service and we got our average service call up, not only paying our guys more 120, if we got it up only a quarter hour, if we could get our average billing time up 15 minutes more on average, boom. So instead of 258, now we're the average invoice at 301. What's that do to the front end? Boy, we've almost doubled our profit. You can do all kinds of what if scenarios. Let's leave this at 225. One thing I do in a lot of service-based companies, trades companies, and that is you're always using supplies. You're using hand cleaner, you're using towels, you're using floor dry, you're using, electrical tape, you're using all kinds of things. And I've had people add a lot of money. So on every invoice, people aren't even aware of it, and it's a true cost. You're going to add a $8 service fee per order, shop supplies. A lot of times you go to a garage, they have a service fee or shop supply fee on an invoice, right? So if we added $8 to every invoice, what's that going to do? We're back to the 2.25 hours. We bumped our rate a little bit. We made $89,000. Let's say we didn't want to bump our shop rate because we're higher than our competition now, 115. Back to business decisions. Let's take this off. We're going back to zero. We know where our profit went down to 38,000, but by adding that $8 shop fee to every invoice, what's that going to do? We're almost up there. So you can see by making little changes. Now, let's grow our business. You know what? Somebody said these Facebook and Google ads are really good. So we're going to spend $1,500 a month now on Facebook ads. And somebody said Google's really good for my business, and we're going to spend $2,000 now. And now this agency, they're going to charge us $1,000 a month now to do this. But you know what's going to happen? If hopefully we're going to get more business, so we're going to go over here and we're going to add. We have 3 trucks now. We're going to have to add another truck, and we know it's about $12,000 a year. So it's going to cost us $48,000. We want to grow this year. Add another truck. Our labor, and I'll go to the labor in a second, but you know what? We're pushed to the limits in office now. We need another admin warehouse person, and we got to spend $40,000 on that. So we're going to spend, and at mid wage is $220. So our fixed costs now have gone up from $241 to $393. What if you can put anything in here? So we've increased our fixed costs by 50 grand. We've changed our monthly marketing spend from $1,000 to $3,000. We're the same here. Let's go to our $120 rate, and we're paying our guys $40 an hour. If we hire another guy, it's in this labor fee here. So it can tell us now if we did the same amount of invoices. Boy, we're behind the thing. But you know what? We're doing all this marketing, and we're getting, pull a number out of my butt here, we're getting 25 more service calls a month from that marketing. So 25. So now we're up to, say, 240. Oh boy, we're still not ahead, So we're having that extra technician, and they're doing 3 services a day times 21. So we can actually do 60 services a month now with that other guy, and our advertising's working. What did I say? I said 3 times 21 plus 215. So actually, we're going to do 278, let's say 280 services, because our marketing's working. We have an extra tech, we have an extra vehicle, and we got that person there. So holy smokes, look at here now, we've doubled our profit. So you can project, you can make decisions, hiring people, adding capital costs, changing wages, changing marketing, anything in your business, and you can see how it's going to affect your bottom line before you actually go and ever do it. You guys like this? Any questions on this?
I think this is a powerful demonstration, Paul, and I think this is going to be helpful. People want to email you for these sheets to then go and play with the numbers on your own and practice with this stuff. It's good demonstration.
You got to know your numbers. Again, you can project ahead before, like I say, you hire the guy, you change your rate, you pay somebody more, you do some advertising, hey, our shop's too small, we got to rent a new shop, we're going to build a new shop, whatever your situation is, you can plug it in and you can see what do we need to sell to make X. I'm a big believer in reverse engineering it. And also say if we want to make $200,000 so we can just, and our costs are the same, whatever, you can just go up here, you can, reverse engineer that. Oh, we don't need 320, we need 300. No, we need 310 orders a month to basically make 200,000 a year. So you can reverse engineer things as well. Okay, we better keep cooking along here. I could go on all day with this stuff. I love it. View slideshow. Just a quick thing on ways to improve gross margin, that 5 points, because gross margin is power. I covered this last session. Easy thing, you can raise your prices. You can reduce your cost. If you're making your widgets, how can I be more efficient and produce our widgets easier? Maybe if we're buying it or making, we can buy our raw materials or buy our product in bulk. Ask for a better deal. First power of negotiation, ask for a better deal. Can you do better? Half the time your supplier will do better if you ask for a better deal. Change suppliers, tendering, depend what you're buying, put it out there, shop around once a year, and see who's got a better deal, who's more aggressive. I like being loyal to suppliers, but sometimes you got to shop around. An example, 3-4 years ago, a client had bought their raw ingredient for their business from the same company for 15 years, and they were buying about $300,000 worth of that ingredient a year. I says, we're going to put it out to tender this year. One of the things I recommended to them, we put it out to 4 companies. We ended up buying from the same company as we always did for $50,000 less than the year before. He sharpened his pencil just by, maybe he was a little complacent. I'm being a little too greedy. I got 3 other guys and let them know that we're tendering this thing. The guy saved 50 grand just by doing that alone. That's a real life scenario. Make sure everything's billed. You have no idea how much of a common problem this is, that people don't bill everything. Do you have a system? Again, when we build system boards, it's literally impossible for people not to invoice stuff because you have a record. I'm picking on the tradespeople here today. If you were at my last webinar a few years back, an HVAC company, they had 7 techs, busy, weren't making money, had no money in the bank, could hardly pay their bills. They had no systems. I caught in 9 months over $300,000 of labor that they didn't bill alone. That's real life stuff out there. It happens. Theft, the stuff going out the back door. Is there dead inventory that's, going bad that you can't sell? There's can reduce dead stock. So there's a lot of ways of improving your gross margin. Those are just a few examples. Better keep going here so we're done on time. Cost accounting. Cost accounting is a managerial accounting process that involves recording, analyzing, and reporting a company's costs. Should be broke down into the unit. So if you're billing by the hour, you want to know your costs by the hour. If you're billing by the dollar, your percentage of that. If you're a campground and you're renting out a lot, what is your cost per lot per year? Breaking all your costs down into the unit that you're selling. And some quick examples that you want to know. What's your marketing? Breaking down marketing, sales, fixed overhead, variable expenses, and profit. On the marketing, just some quick examples. Your cost per lead. You advertise, you have 100 people come into the business, so you take your spend, divide by the number of leads, you spend $3 grand a month, you get 100 new leads, not saying customers, So it's costing you $30 a lead. Another is spend percentage of sales. To spend $3,000, you're doing $50,000 a month in sales. 6% of your gross sales is in marketing costs. Spend per order, dollars spent divided by number of orders. You spend $3,000 on marketing in a month. You do 200 orders. It's costing you $15 an order in marketing. On the sales side of things, if you have a sales staff, first you got to know your conversion rate. So, we spent $3,000 or whatever it was. We got 100 leads, but we got 20 new customers or 20 orders from those 100 leads. You're not going to sell to everybody. So we had a 20% conversion rate. So cost of conversion, what did you spend divided by the number of orders or clients that you got? That $3,000 divided by 20. So it cost you $150 an order or per client. Percentage of sales, what you spend in your sales costs, paying your salespeople, divided by your total sales. So you spent $3,000 in sales salary. They sold $50,000 at 6% of your costs there. So again, breaking this down so you know your costs per unit. Your fixed costs, total fixed costs, expense per order, total fixed cost divided by number of orders. So we have 30,000 in a month in fixed costs. We had 200 orders, 200 invoices. It's $150 per order of fixed costs. Before you even sell anything, you do that. That's what it's costing in overhead. Percentage of sales, same thing. Total fixed cost divided by your total sales. That 30, we did 125,000 in sales, say. So your fixed costs are 24% of total sales. Again, I like doing this down per line item. So, what is your min wages? What is your rent? What is your insurance? What is your whatever? That's what I've done over the years in my businesses. And that's how you really fine tune profitability, is when you know each line item in your P&L of what it is to your sales. That's how you can get real granular. You can really dial things up and start making money. Variable costs, again, you don't have a variable cost unless you're selling your widget. So total variable cost per order, your total variable cost divided by your orders, you had $10,000 in that, $40 an order. Total as a percentage of sales, you take your total variable cost, which is your gross margin in essence, divided by your sales, 40%, and that would be your gross margin. And again, it's a good idea to break this down, especially if you're manufacturing your own product or you're in the service business. You want to know your costs of each unit in that variable cost. So kind of breaking it down overall, in a simple version. I'm going quick because we're going to run out of time. Total sales, 100,000, variable cost of 50 is 50%. And 50% gross margin. Your fixed costs are 30,000 is 30% of overall. Leaves you $20,000 left over. Bottom line, 20% of every dollar you sell, you're making in profit. I have another little spreadsheet I do a lot of work in the ag business and construction industry. So, if you want to know, say if you have farm equipment or construction equipment or anything, if you're leasing it or you own it and you're paying amortization, your fuel, your repairs, your maintenance, your insurance, whatever associated costs are with a piece of equipment, you keep totaling that up, because is it cheaper to buy new or fix old stuff? These numbers will tell you. Keep your costs of your operation. So on this piece of equipment, we spent $29,000. We put 350 hours on that unit. So our cost per hour is $82.66. Maybe you can hire somebody at $50 an hour. Maybe they're charging $125. You need to know your cost per unit. Again, say if this is a farmer, this piece of equipment, he runs over 250 acres in a year, is costing him X per acre. So again, back to your unit. Again, knowing your costs. We do this in Monday boards too. Take your maintenance, track everything. So in a period of time, your total operating expenses for a piece of equipment, so you can keep tabs on that at all the time. It's really important. Know when is it more advantageous to fix an old piece of equipment or keep new equipment? Again, you can put in breakdown time and lost time into some of these calculations as well. Any questions on that? Nope. We'll go back here. You were almost done. The other thing that you want to do is the fifth thing in knowing your numbers. We talked about the dashboard of your car, knowing how fast you're going, how much gas. It's really important to create a dashboard for your business. Whatever your key numbers are, your KPIs, key performance indicators, you can feed into a dashboard anything you want. What is your overall revenue in a period of time? What is your gross profit? What is your inventory levels at? What are your accounts receivable at? Whatever numbers are important to you. With technology today, it's really easy to feed into a dashboard that you know in real time what our numbers are. Not that you have to try to dig into your QuickBooks and look at a P&L or a balance sheet that you maybe don't understand. Is you can interlink this stuff with technology, so you can have live dashboards for your business, so you know what my score is by looking at it in real time. From financials to, you have a sales staff, we do it for sales, average conversion, average days to close, average order value, all kinds of things there. If you're manufacturing things, you can create a dashboard for, cost of production, what you have in WIP, what's ahead, work in progress, what are you behind on, any key number. It's important to build a dashboard so you can look at it in 2 seconds. You know what your score is, you know how fast you're going, you know how much gas is in the tank. From there. How's that? I have 10 minutes for questions, Christina. I kind of buzzed through that. Just a couple things here. So bottom line, you need to know your numbers to understand them. If you want to have a profitable business and you want to grow your business, just a couple little things here. Are your financials updated monthly? It's so important to keep your financials up to date and accurate, balanced, and reconciled. Good bookkeepers are hard to find. If anybody needs one, I have a really good one right now I can recommend if anybody needs a bookkeeper. But it's really important to keep your books up, keep them done properly so you know what's going on. Do you know your break-even point of your business, especially if you're going to be making changes in your business, expanding, doing different things, knowing how that's going to affect your break-even? How much more do I have to sell if I change something within my business? It's really important. Do you track your gross margins on a weekly, monthly basis? Again, what have you done to improve your gross margin? Gross margin is so powerful, as we've seen in the calculator. Again, how do you track your business's performance? How often? How does this help you be a better manager? Again, back to the dashboards. Again, how often have you made little changes just like that? That supply cost added to an invoice, little things like that. When's the last time you've done little changes and seen what it's done to profitability in your business? Just tweak little things and see what it does. Come on.
And I did put up Paul's website as well, so you can access his website just while your screen's here loading. And also the software that he uses, as well as supports and recommends Monday.com, so you can see that as well.
This is freezing now.
It is freezing.
So just back to here. Oh boy, what is this? So again, and I'm going to show you my website, something to show you in a second, businessprofit.ca. Go and look around what we do. I'm on LinkedIn myself and the Business Profit. We do different posts, different ideas. Same Business Profit on Facebook, Instagram. I'd love for you to follow me. We put lots of information out there. One thing I'm going to share before we open up questions, on my website, up in the top corner in all the pages, is Get Your Business Score. It's a 17-question questionnaire. It would literally take you 2 or 3 minutes, and you kind of get where you're at as a business score. You send it in, it's an automated form, and you'll get a result back after I have a look at it. So I challenge everybody to do that. It costs nothing. If anybody wants to book a call with me, I don't charge. I'll do a half-hour consult call with anybody. If you wanted some questions from today, or put some of your numbers into a calculator or whatever, you go to my website. I automate things. I'm a big believer in technology. We have a lot of, just with all the video here, it's taken a second to load here. So down at the bottom, electronic calendar, you can see my availability in red. So you can just click on there, pick a time, and you automatically book a Zoom call with me from there. So, and I don't charge for that. So that's it. We'll open it up. I'd love comments and questions, and I'll stick around as long as you want.
Well, thank you, Paul. This is a lot of information. I'm sure everyone's going to have some digesting to do on this material, some thoughts, maybe restructuring of their own sheets. And as a reminder, we do have this recorded. That's a cue, Paul. We can turn off the recording.
Oh, okay, then just let me do that. I was looking at
Yeah,
this.
so we will have this recorded. So what I'll do is I'll send this, Paul's slides, Paul's contact information, so you